Hi, my name is Grace Cisna, and today I wanted to take a little time to walk you through our Boutique Hotel Excel financial projection template. When you open up this template, you'll notice that like all of our Excel templates, we have several tabs in light blue here on the left, and then some tabs in green here on the right. So the light blue tabs are the input tabs, where you're going to be inputting information about your business, and then the green tabs are the output tabs, and these are going to show you your financial statements in annual and monthly formats, as well as some data in this at a glance tab and some neat graphs and charts. So this Excel template is going to take some easy inputs and produce these financial statements for you. It's a much easier way to get professional looking financial projection statements for a bank. If you're looking to get a loan or perhaps for investors, and we even have some graphs and charts ready to go into a pitch deck if you're looking for investment. So let's start with the Input Assumptions tab. You'll notice on this first light blue tab that there are cells in a corresponding light blue color, and these are the input areas where we're looking for you to fill out information about your business. On the Input Assumptions tab, you're going to fill out things like your business name, the projection start month, an inflation rate for operating expenses, any investment that you have, whether that's personal investment, friends and family investment, or other levels of investment, any investment that you have already or are hoping to get can go here. You'll see in all of these light blue cells, there's data already filled out when you download the template. That's just example data to show you what kind of information we're looking for. It's not necessarily suggested data or industry standard in any way. It's just showing you the kind of format that we're looking for. You'll notice in this investment section here that this personal investment we use as an example is invested in month 0 of the template. Month 0 just means it's going to be on the opening balance sheet. Opening balance sheet is kind of an accounting term, but it's essentially saying what was in place right before the business started operating. So if you're getting some investment before you start operating, you could put it in month 0, and that way it shows up on your opening balance sheet. In addition to investment, we also gather information about accounts receivable. In most cases, for a small hotel or inn, you're not going to have accounts receivable. Everyone's going to pay you either well in advance or during their stay. But if for some reason people are paying after their stay, you might have some accounts receivable there. Supplies inventory, if you have anything such as, toiletries, supplies, food, perhaps if you're doing a bed and breakfast, or if you're serving lunch, you could have food supplies as well. So any of that sort of inventory items that you'll have on hand. You'll note that we calculate inventory after the first month as a percentage of next month's supplies, and that's use of supplies, and that's to keep the supplies going up and down with the revenue. So your supplies balance will be higher in months where your revenue is higher and lower in months where your revenue is lower, just so it tracks along with revenue. We have fixed assets here. This is going to be a big portion for any inn or small hotel. Obviously, you're going to have a building, any improvements that you might have on the building, furniture, fixtures, point of sale system, computers, if you're renting kayaks to your guests, or bikes or whatever it may be, equipment there, any linens, towels, plates, dishes, cups, all of those fixed assets can be entered here. You enter their name, their value, their life expectancy, their salvage costs, and all of those items help us calculate depreciation expense. The model will calculate that for you and plug it into your income statement. And then again, you'll mark the month in which it's purchased. A lot of these items are going to be purchased before you start operating, so in month 0 for the opening balance sheet. But some of them may be purchased throughout operations. So maybe you're going to be updating furniture in year 4 or something like that. So you would enter in the corresponding month for the purchases there. Any loans that you have can be entered on this tab as well. So this is going to be common. You might have a mortgage, a small business loan. You might have financing on equipment or construction. And all of those loans could be entered here with their amount, their monthly number of payments, their interest rate. And then the monthly payments will begin. Just a note about this, the model is going to assume that payments begin the month after you receive cash. So in this case, if your payments start on month 1, the model will assume that you receive that cash prior to opening. So for your opening balance sheet, if the payment started in month 2, we would assume you receive the cash in month 1. The input revenue tab is the meat of the model here. This is where you're going to enter all of your revenue and cost of sales or variable expenses as well. So the first thing on this tab you'll see is this chart here. And this enables you to enter your different rooms, their price for weeknights and weekends, your average prices there, and then any other additional spend by customers, or clients, or patrons during their stay. So room service, in-room entertainment, food spend for breakfast, etc., and then housekeeping and toiletries. These are the cost items associated with the room. So every time you have somebody spend the night, maybe you've got a housekeeping cost, if that's your hourly labor, and toiletries as well. So you can enter either rooms or room categories here. If you've got more than, looks like 9 rooms, you can enter them in different categories. So maybe rooms 1 and 2 are really similar and have the same price every night. So you can enter them that way. You can enter each room individually if you have less than 9, or you can kind of group them like we've done here. And then remember, if you're grouping rooms, put the correct number of rooms. So you can see rooms 1 and 2, that's 2 different rooms. The rest of them are just listed individually. The next section here is the capacity. So you're going to fill out capacity, and you can fill this out for every month in the first year. And then the model is going to use that same pattern, but grow it over time. So a lot of inns are busier during the summer months. So in this case, it's filled at about 50% capacity on weeknights, and then it increases to 70% over the summer months. You can see our summer months here, and then decreases again as we head into winter. And then the model is going to take that exact same pattern, but increase it by 5%, or this value here. So you can change that. And so you'll note it starts at 53% in the summer, or in the winter, jumps up to 74%, back down to 53, and then jumps up to 55 the year after that because of the annual increase. So you can do that same pattern for both weeknights and then weekends. And we break those out separately so that you can, obviously revenue sometimes differs for weekends versus weeknights. We also have a max capacity filled. Obviously, it's impossible to have 100% capacity filled at any given time. There's always going to be issues, cancellations, random Tuesday nights that aren't filled, etc. So you can set that max capacity to whatever you would like. We recommend something below 100%, and that will keep these percentages here from going over that maximum capacity. From there, the model calculates out your revenue from weeknights and weekends based on your prices here, the number of rooms available, and the percent capacity. So it calculates out your monthly revenue, and you'll see it starts lower in the winter months, increases during the summer months, and then drops back down. It follows that same pattern every year. And then revenue from those other sources, room service or minibar, in-room entertainment, and then food service revenue. We also allow you to calculate variable expenses. So this is going to be the cost of room service and the cost of food. If there's any food service that you provide here, that calculates out the cost of those items automatically. And then at the bottom, we sum up your sources of revenue and your total cost of sales. So that is the big chunk of the model there. The next chunk is going to be other expenses. So these are your operating expenses and other monthly expenses that you have. So we've got some examples built in here. There are 2 ways to calculate these items. You can either calculate them fixed here, so it's a fixed amount every month. You'll see this increases over time based on the inflation rate we set on the input assumptions tab. These are always monthly amounts, so we break out months 1 through 3 separately to enable you to plug in your startup costs in those first 3 months, and maybe you'd have a big legal expense in month 1, and you can enter that just in month 1. These are always monthly amounts, so you can see for the remainder of year 1 here, this is still $1,000 every month, this licenses and fees. And then in year 2, it's $1,030 every single month in year 2. So these are always the monthly amounts. They're just applied to broad categories here. The other way to calculate expenses would be as a percentage of some type of revenue. So you can calculate as a percentage of total revenue or any of the other types of revenue that you have. And these items might be things like credit card fees. So if guests are paying you with credit cards, Visa and MasterCard obviously take a chunk of that. So that is going to be calculated as a percentage of your total revenue. Just a note to include or to write out your percentages as, for example, 0.02. This is 2% here rather than 2. So just follow that pattern there. You can also enter your effective income tax rate at the bottom. The last chunk here is salaries and owner draw. So if you have salaried employees, we've got a manager listed here. In fact, there's 2 managers because this column here has a 2 in it. Any other, if your housekeepers are salaried, if you have other staff that's salaried, perhaps you're going to take a salary as the owner, and you can enter that here. Also, if you are a corporation, you can pay yourself as the owner dividends rather than a salary, and you can enter those items here. We call that an owner draw. So those are all the input tabs, and once you get that filled out, you're done. The only thing you're going to have to do on these next tabs is maybe hide or unhide a couple rows. So these are the output tabs of financial statements. You can see here we have an income statement, a cash flow statement, and a balance sheet. And first we show you these in the annual format, so you can see every year for 5 years across the top here. And then we show those same 3 financial statements again, but in month-to-month format, so every single month for 5 years. So this is a pretty long tab here. And so that breaks it down in a little more detail. So the income statement is going to show your sales, your cost of goods sold, and then all those operating expenses, including loan interest, which we calculate for you based on your loan inputs, and depreciation, which we calculate for you based on your fixed asset inputs, and then all these other items that you enter in the model. The cash flow summary is really similar. Cash flow differs from income statement a little bit. Depreciation obviously doesn't show up on the cash flow statement as you're not paying somebody as your building depreciates. It's just an expense that you incur. And then you also have cash from other sources other than revenue. So cash from new loans or investments, and then cash you pay towards loans and cash paid for fixed assets. Those items show up on a cash flow statement. The balance sheet summary. Our balance sheet's always balanced. That's one of the key features of ProjectionHub balance sheets, no matter what you change in this model, as long as you're only changing these blue tabs or blue cells here. Our balance sheets will always balance because they have the calculations necessary to pull everything through correctly. One of the hard parts about building one of your own or model yourself is getting that balance sheet to balance. It takes a lot of hours, so this is going to save you a lot of time. You don't have to worry about trying to get the balance sheet to balance. So those are the 3 financial statements, and then our at a glance tab shows you some key ratios, profit and loss at a glance, some nice graphs as well. So that is a brief overview of our boutique hotel Excel template. This is available at projectionhub.com/templates. If you like this template, but you think you need a little more help filling it out, we're available to help fill out these templates for you, so that's an option. And you can reach out to us at support@projectionhub.com. And also, if you like the template, but maybe you have an additional line of revenue, you do boat rentals or whatever it is that you may do, horse stables, if you've got other sources of revenue, if you run a cafe or a restaurant, we can add those things for you through our template modifications or consulting services. So if there's anything that you need, please reach out to us at support@projectionhub.com. Again, my name is Grace. I developed this template, and I'm always happy to get it working just right for your business. So feel free to reach out.